Today, I am going to show you the traffic light strategy, which consists of using 3 exponential moving averages, EMA, and a stochastic indicator. The strategy can be used on any time frame and on any financial asset. In any case, I remind you that the longer the time frame, the greater the precision of the strategy. For this video, I'm going to use it on Ethereum in the 30-minute time frame. The first thing we will have to do is select 3 exponential moving averages. In my case, I will select this one here because there are already 3 moving averages in a single indicator, since TradingView, the platform that I use to carry out the strategies, only allows you to put a maximum of 3 indicators. After selecting them, we will configure them with the parameters of 20, 50, and 200. At 200, we will increase the thickness to the maximum and we will put the color red. At 50, we will increase the thickness a little and we will put the color yellow. And at 20, we will simply change the color to green. The next thing we will have to do is select the stochastic indicator. To this indicator, we will put the parameters of 355. And we will change the stochastic line to white and the signal line to red. Once this is configured, let's briefly explain what the strategy consists of. A fundamental principle of trading is to trade with the trend, never against it. As we know, there are 3 types of trend: bullish, bearish, and lateral. The strategy that we are going to develop applies to the first 2. The first step in this strategy is to identify the trend of the financial instrument we are trading, and one of the best tools for this is moving averages. Moving averages give us reliable and clear information whether or not a financial instrument is in a trend. After identifying the current trend, the next step is to find the entry points for our operations. For this, we will use an oscillator such as the stochastic, which will indicate the entry points when the instrument develops price reversals. The moving averages will only serve us to identify the trend, therefore, we will not look for any crossing of them. This strategy is not based on the crossing of moving averages. We will take it as an uptrend if the green EMA is above the yellow one and the yellow EMA is above the red one, as it can be in this case. We will take as a downtrend if the green EMA is below the yellow one and the yellow EMA is below the red one, as it can be in this case. In case the red EMA is flattened, we will not take any trades. Let's look at an example of a buy trade. The first thing we will have to do is find an uptrend, that is, the green EMA above the yellow one and the yellow EMA above the red one. Once we find it, we will notice that in the stochastic, the white line crosses the red line from the bottom up. If this is so, we will carry out the purchase operation. We will put our stop loss at the last minimum and our take profit at some support or resistance zone with a minimum risk-benefit ratio of 1:1. That is, we risk 1 to try to get 1. Let's look at an example of a sell operation. The first thing we will have to do is find a downtrend, that is, the green EMA below the yellow one and the yellow EMA below the red one. Once we find it, we will notice that in the stochastic, the white line crosses the red line from top to bottom. If this is so, we will perform a sell operation. We will put our stop loss at the last maximum and our take profit at some support or resistance zone with a minimum risk-benefit ratio of 1:1. That is, we risk 1 to try to get 1. Let's see some more examples. and ready. I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.